Hey guys, welcome to FX Chronicles. This is Awesome, and in today's advanced course lecture, we're going to go over a few different things that I myself actually incorporate in my trading, and that I try to somewhat not impose but teach you guys in my course. Obviously, previously in the course that we have looked at certain things, like we're looking at the pivot tables, or we're looking at certain stochastics or different kinds of indicators. Right now, the way I'm going to show you the trading is done, and the part of trading is that it's always learning. You're always learning something new about it. But the most important thing in trading is keeping it simple. So right now, what I'm going to show you guys is trading based on no indicators at all. No pivot tables, no EMAs, no stochastics or RSIs, nothing whatsoever. Just pure price action. And that is usually how I trade and who I am. And I believe a good trader can do that, can actually learn on basis of that and trade on basis of that. And it's just a matter of time. And that's why we have the group, to help each other out, where what the support levels or resistance levels we're looking at and whatnot. And the second portion of this video is going to be dealing with the dollar index that we have, the correlation with the dollar index. A lot of people get a little stumped when someone brings that up in the course, that they might not know of how to look at it or what it's telling us. So I'm going to go into that. I'm going to show you how you can look it up and how you can incorporate that in your trading. It can give you perhaps as another odd enhancer, like help increase probability in the way that you're thinking about trading a currency pair using the US dollar. And if anything else, you learn something new, right? So let's dive right into this. Okay, first of all, just a disclaimer, Forex includes a lot of risk, as if you guys don't know that. The information that I'm providing is educational basis. So, okay. So here's the first step. The long setup requirements. This is what you need for using no indicators. Look for trends on weekly and daily charts. Very important. Just those two charts, okay? Look for support levels on monthly, weekly, and daily charts. So we're looking for key levels now. That's very important. And then we look at a smaller time frame, such as an 8-hour, 6-hour, or 4-hour for entry with stop loss based on daily chart. I guess I'm going to get more into the third portion. The first two are self-explanatory, and I hope that the third portion is explanatory as well, but it's really going to help you guys when you see it in action. So let's do that. Okay. Alright guys, here is the Euro USD chart. Now we're going to do what we've been doing for a while. First of all, we're looking at the trend. Trend has definitely been down, whether it's on a weekly or daily, or even perhaps on the monthly. Okay, the trend's been down. Mad. It's crazy. Okay, we obviously know that. Now we're dealing with a long setup, so why would I go with a Euro USD? Basically, a few reasons. I was heavily biased towards shorting Euro USD just because the trend has been massively down. But something happened around this region. What we saw was, obviously, this is on the daily. The price came into this region, which is about 1.04. Or actually, you can just click on this and find out. Like, yeah, 1.04625. Okay, 463, 460, let's just say. Okay. And then it went up, and then it came back into that region before it shot up. Now, we don't see anything out here like what that would tell us that this was a good support level, especially based on daily charts. But how about we come down to monthly? So sometimes it's really important to look for these levels starting from monthly. What do we see? We have created this, and we see that previously prices had touched in this area and it had just skyrocketed from there for the next few months. Again, it touched in this area and it went up. So there has been some data. Granted, we're going literally 12 years, 12 years in the past to look for that, but it is there on a monthly chart. It's available. So what we let happen is a few ways to look at this trade. If it got into this, you could have gotten some kind of a alert from any of the apps that you've been using or whatnot, and you see that it goes up, it comes down, it goes up. This would be a good area to short, just because you had some kind of resistance building up here and the ultimate trend is shorting, and it would come down here. When it came down here, you realize that this is the region from where previously it had gone up. So what do we see here? We see that we have this kind of an indecision candle, I would say, on the daily chart. Okay, that's one thing. But if you were to take a long on this trade, how would you do that? How would I do that? Okay, so we know on the daily, or on the daily chart, in this region the price went back up. Okay, now I have gotten down to a smaller time frame, which is the 4-hour chart. I'm looking to go long. I'm looking for a low risk, high probability trade. So again, let's just say the day ended right here and it closed at 560, okay, 570, and the low is 460 around here. Okay, if I want to go long, where would I be looking to go long? We're looking at April 14th. So I go on the 4-hour chart and I see what's starting to happen here. We see these inverted hammer type of pin bars sequences that we have used previously for breakout entries. So we could either enter on this one with our stop being at the low of this, which is 460, and we would enter around, let's just say 570. So that's 110 pip risk, or maybe 2 to 3% risk on the trade. Okay, or you can wait for a pullback like this one and a breakout of this candle, which is again around 580. 580 on this candle, and I would put my stop in that case. Since this is April 13, this is April 14, I would put my stop below about 500, or what's the low of this? Low is 520, so 510. So I would put my stop at 510, and I would be looking to go long at about 580. So 70 pip risk. Okay, 70 pip risk. Breakout of this 4-hour candle, low of this day. But let's see once more. So yeah, so low of this is 520. I would put it below this, which is about 515 or 510. The reason I'm saying 510 is just to be on the safe side. Or if I want to be crazy safe, I would put it at the lowest of this entire region, which is 460. And that would give me a much more room for movement within the Euro USD, which I think I might have probably done in this case. So I would either put it here about 510, and on a 4-hour chart I would try to take around 580, or the way that we teach about the breakout method, I would probably go long around 625. So I would put my stop at 520 to 510 and get in around 625, which is breaking the high of this, about 115 pip risk. Okay, not too shabby, and my stop is still right here at the low of a daily candle. Why do I choose the stop to be at the low of a daily candle instead of the low of a 4-hour candle? First of all, I need to give myself more wiggle room, more room for my trade to move. And secondly, when you put your stops based on daily candles, you literally only have to look at the trade once a day, because then you're waiting for the right movements. You're waiting. You're not going to be constantly worried about looking at trades, and that's the key to trading, is that you don't want to be over trading. You don't want to be in front of the trades all the time, and don't want to panic if things go against you either. So that's what happened. There was a breakout, but then the price pulled back again the very next day on the 15th to almost 570, and then it just went up. And then there's this hammer, it pulls back a little bit more, it goes up, and it continues to go up. We could consider this a resistance area, but we have to keep a few things in mind. First of all, around this area, the trend started to go up because it was in a support area, support area, and we started to see higher lows. The low wasn't lower than this low, so it's a higher low, and the low is increasing. Of course, it kind of took a dip, but then it continued. Now here, previously, so we're seeing a change in trend right here. Now here is resistance, some resistance previously, but with the strength that euro is showing, it's very probable that it will break through it, because it's not a very fresh resistance level. And what I mean by that is that it was touched a few days ago, but it's already been a double top before. If it was the first time coming down, like for instance, if it was something like this, would be a resistance, and you would come back into that region, then yeah, I would be shorting around here for sure. But because it's been already notified as a previous resistance and it's been broken, there's no problem for the euro to just go hammer it. Now what we see here is we have resistance in this area, and we discussed this last week as well. Price comes here, it starts to fall, because whether you agree with me or not, the ultimate trend is down. So if there's going to be some strong resistance, euro will have a tough time fighting it. Pure technical analysis, that's what this is, nothing more. So let's look at a few different entries that we could have taken on this trade. We could have taken this trade with a low of about 515 and get in around 625 on this daily, and we're looking at this support area, about 110 pip risk, okay? And we could have easily taken it to 1.1, so that's over 375 pips, or about 4-to-1 risk reward ratio. And after that, I would think that this would be the second region where you could look to short. So it could go all the way up to 1.114 ish, so about over 700 pips profit, 7-to-1 risk reward. And all you have to do is literally just check on a daily basis, because your stops are based on a daily candlestick instead of on a 4-hour candlestick. And that's what I really try to emphasize. And more that I trade, I've realized that basing my stops around a daily candle helps me so much more. I'm able to stay in a trade much longer, and a lot of times these trades tend to be very profitable. So it's just one way of looking at it. Maybe they might not reach my targets, but there's enough wiggle room, enough room for movement in these trades on a daily chart, or stop losses based on daily candles, that I can get out when I feel like, okay, I've made some decent gains, let's just get out, even if it hasn't reached my, or if I'm just very patient, I wait for a couple of days, I can just get some massive returns. And we got multiple opportunities to get into this trade. One would be this one, the ultimate opportunity right here, or one could be based on the 4-hour chart. When the price dropped down here, you could just enter here with, what's the close on this one? If you get in at 570 and you're putting your stop at 470, it's 100 pip risk still, and 570 went all the way to like 1370 and above, so it's like 8-to-1 risk reward ratio, and you would still just have to check your trade once a day. Crazy. And the other opportunities that you could get to enter is right here. This is one of our trademark inverted hammers that we look at, and a break of that telling us, hey, trend is changing. Then around here we see a few dojis ish, and the price is not able to go below, close below these, so, and breaks these in fact, and continues over the next few days. Another quick trade right here. But the issue with this one is, if you go long here, which I think we did, you're hitting resistance around here with the ultimate trend being down. So I would be really wary about something like this. I would still take the trade, but with my stop just below the daily candle. But within a few hours, if it's hitting this range and I'm seeing it's having some trouble, I'd probably close it and pull out some gains, whatever, how many pips it is, like 50, 75 pips. Yeah, I would, like, in this case it's like 150 pips. So that's the long setup. Okay, now keep that in mind. it's not that bad, and this is what I really wanted to show you guys. This is purely done on technical trading. Okay, now for short setups. Okay, let's see if we have a short idea. We see the same thing. We see that dollar CAD on monthly, look at monthly, it comes into this region, which is still, whether you like it or not, even though it's been in an uptrend with the dollar showing strength all these months, this is a resistance area. This is a resistance area, and we're looking at short. Okay, freehand. We're looking to short around this area. Okay, when the prices got into this region. Okay, and we come to the weekly chart. But most importantly, I like to take trades on daily. That's just my thing. So we first see the price pops in here, it goes down, and we're still like, okay, you know what, this is a easy up trading, you know, currency pair because it's dollar CAD. Then it comes here and bam, it comes down. It comes down here. There is some support here. We can see that we have the inverted hammer, and it goes up. But then it hits resistance right here. So what I want to go back to is the short setup, similar to the long setup, looking for trends on weekly, daily charts, looking for resistance levels. I think this is more important than just the trends, in my opinion. Well, I mean, trends are important, but this and daily charts. And we saw resistance levels on the monthly for the dollar CAD and for the Euro USD as well. Look at smaller time frames for entries with stop losses based on dailies. Okay, and I remember we took this trade. We actually discussed this trade in the trading group. So what happens is that the price rose into this region and it closed down, and this is a pretty solid confirmation. Hey, price might be going down here. You know, you all need to watch for that. So I would personally, you know, put my stop at the high of this, which is about 790, or even going to like the high of this one, which is 840. Okay, but 790 is where I would put my high. Now let's see if we can get something going on the 4-hour chart with this. See, isn't this beautiful? On the 4-hour chart we get a hammer candle. Amazing. And I would just short at the break of this, which would be low of this is 720, so 715 I would take a short, and I would put my stop at about 790, which is about 75 pip risk. Okay, and I'm still trading on the daily chart, and it goes down easily to, even if it goes down to 2500. Okay, so it goes down to 2500 from, you know, 715. That's 315 pips with a risk of 75 pips, which is a 4-to-1 risk reward before it pulls back. It pulls back on the daily. It gives you another this long wick candle. By the way, if you see a candlestick like this and something like this within a region of resistance, look about taking that short. You know, put your stop at the high of this plus whatever your spread is. So if your spread is 3 pips, the high of this is 667. I would put my stop at 670 and let it pull back. Let it pull back a little bit more. And I think, see, it pulled around here. This is a 4-hour chart. Where did it go? Yeah, see, it pulled right here, and I would probably even go like 630 on this with 670 as my stop. Boom, money. This is And sometimes it's difficult to see something like this, and that's fine. But yeah, see, it went all the way up to 645. So you could literally get this trade in with like a 25 pip stop loss, and you're getting at about, let's just say you get in at 630 and your stop is at 670, okay, or 675. So you're putting 45 pip risk, and look at it go down. With just managing your trade on a daily chart, on daily basis, you would easily hit like 350 pips right here on a 30 pip trade. It's a 10-to-1, amazing risk reward, and a lot of people in the group took this trade. And there's a couple of ways of managing a trade like this. You can manage it based on daily charts, where you just wait for everyday candles, and or you can manage it based on pips. Like if you make 100, if you are risking 30 pips, and if you make 75 pips, that's more than 2-to-1. So move your stop loss to, I don't know, 30 pips or something, or just manage the trade on based on daily candles, stop losses, just amazing positions. You know, it's just so much potential in a trade like this if you're willing to, you know, be comfortable with the risk and just taking small gains. These kind of trades move massively, and it went below 1.2, and see what happens. It goes all the way down here, and once it breaks the 2400 level, we know automatically that the next support level is around this region, around the 1.2, 1.19 region, this 100 pip region. And look what happens. It drops down all the way here, and it starts to create this doji. It has a little pull up, then it comes all the way down here. The low of this is 940, and this is 944. Okay, so it went below it obviously by a few pips, but it closed huge wick. And this is a I don't want to call it an inverted hammer, but I think it's a doji, and it's giving you a huge signal in and of itself that, hey, look, I hit the support level on daily chart with the trend of this pair being up. Listen, let's try to go up. So I think there's potential for $CAD to continue going back up, and in my opinion, the next resistance level would be 1.24, just because that's where it fell from. Or honestly, it can go as high as 1.2550, because that's where it all started to really shoot down from, or even 1.25. So this is how you can trade on daily charts, and just be patient about it. I still believe that $CAD is creating this kind of a double bottom or multiple bottom thing, and it's just gonna shoot up. So that's how you get trading setups for long and short, and you don't have to be in front of the screens for too long. That's why I have one of my rules is that I don't trade on Mondays, because I want to look at the daily candle. I really do. But sometimes the trader in me gets a little too excited if I see a opportunity on a shorter time frame and I want to take that. I still try to take it based on daily candle stops. Okay, these were just two examples that I gave. Now I want to move on, and you guys, I really want you to practice this. Bring it up in the course and or in the group chat, and I will gladly help you with what kind of support levels I'm looking at. I just hope you guys can build it around daily charts, because that's the key. That's really where you will have more wiggle room and better investment opportunities. So we did the long setup, we did the short setup. Now we move on to the correlation with the dollar index. So the dollar index really just shows the movement in dollar, and it can be used in a way to show how US dollar is reacting to other currencies. What do I mean by that? It's a odd enhancer in my opinion. I'm gonna give you guys some examples. What do we see here on March 16th? We see that on March 13th, the dollar index, by the way, this is tradingview.com. You guys can check out, free charts on this. It's an awesome resource. And dollar index is DXY. It's usually one of the generic indexes that they have on their watch list. So the high has been 100.39, which is written out here, 100.39 on March 13th, and then dollar started to go down, down. Okay, it started to get weaker. All right, no problem. Let's see what happens on March 13th to our good friend Mr. Euro. March 13th, it hit a low of 463. March 14th, it started to go up, low of 470. Aha, it went up. So you see it's highly correlated with that. But then something really awesome happens. One of the things that I've taught you guys previously about candlesticks is this is one of my favorite candles right here. And you guys know the hammer, it's almost a hammer. It's got a nice, beautiful, long wick, tail, shadow, whatever you want to call it. And you know, pretty healthy bar right here. It pulls back on the next day and then it goes down. It's a great short because you're looking at a few things. You're looking at the resistance levels, okay? And you get this candle. Huge confirmation right here. Hey, dude, go short. Holla. Basically. So let's focus this. What happens on April 13th, okay? We see the dollar close like this, and April 14th, we see the breakout and then just going down. So April 13th is what we want to focus on. What do we see on April 13th on the euro? Aha. This indecision. What happens April 14th? Breakout. April 15th, continuation. So you see how the dollar index can be used. If you just look at the daily chart, it could be a great resource because it's telling you, hey, how the dollar is reacting to other currencies. Now, keep in mind, the dollar index only focuses on the dollar, okay? It's when you're comparing currencies with currency pairs with the US dollar in it. Now let's look at dollar CAD. We'll first look at what happened on March 13th, I think. It went to 823 and it kind of pulled up. But look here, April 13th was the day that we were looking at, right? What do we see on April 13th? April 10th was the Friday where we had this, and usually I don't trade on Fridays. April 13th, Monday, there's a pullback. April 14th, boom, going down again. April 13th, we have this beautiful inverted hammer. April 14th, breakout, and the trend goes down. Now, where is the dollar index right now? You see, it's sitting right here at this support level. It's pulled back, it's pulling up, but there is this some form for resistance. I believe it's going to come down to this region and it's going to create a double bottom, and it's going to continue going up to maybe 97.5. I like to think so. I could be wrong, but I'm going to wait for it to pull back a little bit more and create a formation, because it already broke the highs for last Friday, which was 95.06. So I believe the dollar strength is there. Now I want to test this out. I didn't prepare this for this video, but I'm going to try to test something out here real quick with the dollar index to show you guys how you could truly capitalize on longer term gains. Okay, we see here, this is really the region from where the dollar started to gain a lot of strength, right? And this is about June 30th, okay? June 30th, and then it starts to grow back. Or you can go even as far as May 5th. And this is based on the weekly charts. The dollar has been so strong, okay? Let's look on what starts to happen on June 30th, 2015. This is June 28. Am I doing something wrong? Okay, yeah, so June 28th is the week that we're looking at here. And yeah, I don't know why the dates are off, but basically on the weekly chart for June 30th, we start to see the trend going up. And you guys can put EMAs if you want, like if you want to use a 50, 100, 200 EMA, you can definitely do that to kind of point out what's happening. But you see how highly correlated the dollar index is to the dollar CAD starts to go up. Let's see what happened with euro. That would be fun. This is May 3rd, starts to go down. Look at this. June 28th, and then July 5th. And then it just goes down, July 5th, okay? So here it's going to be July 7th, I believe. Yeah, July 7th. After that, just green bars. Boom, 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 boom. So look at the dollar index. It's a great indicator. It's telling you, hey, what's happening with the dollar, and it can be used really well with other currencies that you're looking at. But again, as I said, it's a audit enhancer, and you can still do the same trading based on technical analysis right here. Hey, you're gonna take some risky trades, granted, but you know, this is a lower high versus this one, and the dollar index really just adds more value. It gives you more validity. Hey, there's either weakness or strength in the dollar, so it doesn't hurt, and it's something new to learn, and it also keeps you focused on how the dollar is doing. But still, technicals can apply. We could take this trade without looking at the dollar index, and we can take this trade with looking at the dollar index, and the dollar index can just give us some more surety. Now, there are other indexes also for other currencies if you are curious, and there's gold. Gold is really great to look at if you're comparing to Australian dollar. We have the euro or the Japanese, okay? And let's just put it to, yeah, I didn't look at this one, but I really wanted to look at the dollar index. We see that there's resistance here, and then the Japanese yen is starting to go up, okay? Now let's see what started happening on May 7th on maybe euro yen. I'm thinking that euro yen would be going down on May 7th, but that's just my hunch. I didn't look at it. Whoa, we have a red candle. It goes down. So you see, these are very highly correlated, but then again, you could find out, hey, there's resistance out here. Awesome. You know, you're not that smart. Of course I'm not. I'm basing everything on technical analysis. But you see, like, you have these support and resistance levels, but at the same time, the dollar or the Japanese or the German, whichever indexes you're looking at, they can be great to help you out with. What happens with dollar yen? That would be fun to watch. May 7th, right? I guess starts to pull back down, or May 5th. But you see, like, how helpful the dollar index can be, and that's what correlations really are. It gives you, you know, slightly bigger odds of how to look at certain things, and it works out pretty well in my opinion. But at the end of the day, the currencies will show you the technical analysis, and that's what I emphasize on is, you know, look for the right opportunities, guys. Look for technical analysis. Look for, hey, what is the market telling you? Everything is in the charts. I'm a big chart trader. You guys obviously know that. I don't trade the news because I don't want to gamble with the news, because news can give us crazy stuff like these kind of wicks, which are great for us to tell us, hey, we should move up, or something like this, where if you're shorting, you could get squeezed out, or just something really stupid and weird bars that I don't want to deal with. Oh, this one I think is probably a news impacted. Like, see, so many people got cut. So why would you want to trade that? Wait for the right opportunities. You know, on a daily chart, just keep your stops open. In fact, on the daily chart, you can even, in my opinion, you can trade the FOMC. You can trade the NFP based on the daily chart, because a lot of times it might not even hit their stops, because stops are so much bigger on daily charts. But if you break it down with, you know, taking an entry on a 4-hour chart and putting your stop on daily, you get the highest risk reward. And you know, you might still have losses like we had earlier with the pound kiwi, but the returns can be phenomenal if they work out. And that's what we look at now, is the risk reward. We're willing to take these risks. Trading is filled with risks, but we're going to take calculated risks. and just convenient risks where we don't have to be in front of the charts all the time. So that's really it, guys. I really hope you guys go over these, and it's really simple. I kid you not. I think in about 30 minutes to an hour per week, you can just pull out some amazing opportunities for yourself in the markets and trade with this. No indicators. I haven't even looked at the freaking EMAs or RSIs or anything, and they're great indicators, don't get me wrong. I'm not against them, but I truly believe like every aspect of our life should be simple, whether it's education, whether it's career, whether it's taking care of our health, family life, relationships. Everything should be simple. There shouldn't be any kind of drama or complexities in it. And trading goes the same way. Keep it clean, keep it simple. I mean, look at this chart. It's just absolutely gorgeous. This blue and red candles and just a white background with grids. Simple. You're not seeing a billion different indicators on this. You can by all means put EMAs, 50, 100, 200. Put those 3 EMAs if you want to, and they help, because they respect certain levels. But just it is what it is. And I love trading without looking at any other indicators. I should be able to trade, because trading should be so simple that I should be able to trade it by just looking at it. And daily charts now, the older I'm getting as a trader, the more I'm realizing, dude, I don't need to have the hassle of picking tops and bottoms all the times, or just looking for like quick gains. No, I'm looking for the big moves. I'm looking for like nice 200-300 pip moves, and you guys see that time and time again. I post them. I make 180, 200 pips, even 300-400 pips, 500 pip moves on trades. Like, this was a great trade we had on daily. We had this one right here, pound kiwi. We got in at, let me just drop it down. I remember, see, on the 6-hour chart, we put our stop at 9,300 and we let it drop to, so let me first show you what happened here. The price dropped all the way into this weekly support area, and then we went to dailies. We're like, okay, what is the daily telling us? The daily gave us this, and then it gave us this. So that's a huge entry option. So you could have 2 entries here. You could have an entry based on just the support level. You could just enter right away at the close. In fact, you could have 3 entries. You could have the first entry at about 475, 480 at the close, and with your stop at about 300. So it's a 180 pip stop, okay? And then you could have at about 510, which is above the high plus spreads. I'm adding that, I'm just making. So that's like about 210 with stop at 9,300, low of this daily. So about 210 pip risk, or you could let it pull back. Which I've kind of been advocating for a while, to about 400. Okay, and that's what we did. We had taken a position on the market about 9,500, and then we took a second position at 9,400 because it went all the way down to 9,380, and then we put our stop at 300. So 100 pip risk, and this thing just skyrocketed. It skyrocketed. And if you just trade this based on daily charts, nothing else, daily charts, it pulled here and then it just kept on going back up. Then it had a little pullback, continued. Then these were where we were shorting it on dailies, and we got cut right here, and that was fine because there was some RBA news, and that was my mistake. Right here we had a stop on a daily and we got cut. But imagine if you were just going long up to maybe this point, and you would get stopped out at about 2.01. You got in at 1.94 with a stop at 1.93, 100 pips, and you made 700 pips return. Now, if you were a boss and you would have stayed in this until today, you would have made what, 1,830 pips on a 100 pip risk. 18 times your investment from April 21st to May 11th in 3 weeks. 18 times. If you're risking 3%, that's over about 54% return on investment with just one trade. 4%, 70% gains. Obviously, look at the potential, but it requires a lot of discipline that even I'm going to be the first one to admit I don't have that. And the reason I don't have that kind of discipline in me is because I'm looking for gains when I'm running the auto trader. I want all of you guys to make money in that, and I just want all you guys to make. But then if you're willing to just move your stops by 100 pips and just let the trade then do its thing, then 200 pips, 300 pips, who knows? 1800 pip return is fantastic in my opinion. But look at this bar. I'm just looking at this. This is insane. Like, I want to look at this real quick. It went from, holy shit. There has been a 600 pip move in the pound kiwi just today in the last 24 hours. That is insane. In fact, in the last 19 hours, because there's still 5 hours to go in the US session. This is insane. I haven't seen like this kind of bar since January, but I think this tops that. Wow, that is insane. So I'm probably not looking to short pound kiwi anytime soon. But you see, all of these things, simple trades based on daily charts you can get, and then you're just letting things happen, and it's amazing. It's amazing how good trading can be. You're not as panicked. You're really doing investment style trading, but with huge potentials. Okay, my throat is starting to dry up now. I've been talking for too long, and I just wanted to go over this stuff, guys. There's huge potentials, and just I felt like that I hadn't done justice with the course so far until I could kind of learn. I've been pushed by you guys to become better at trading, and a few of you have even brought up the point that, you know, the strategies that I have implemented are more based on breakout rather than support and resistance, and I agree. And I just want to go back to the true roots of how trading is done, and that's what it is. Like, see, right now pound Aussie is getting into this region of resistance, so we might see a pullback. That would be nice, but historically pound has owned Aussie. So this is it. Simple trading, guys. No EMs, no nothing. Just focus on your stop losses, and please focus on your risk management. And, you know, sky's the limit. Really, sky is the limit. You guys can make easily 20% gains, 30% gains. The reason I haven't made those gains is because I've made stupid mistakes. Like, I have broken my own rule by over trading at times. Some extra risk I've taken on trades that I was really confident about, and getting out too soon, panicking a little bit, which is fine. I was still profitable on those trades, but trust me, could have made a lot more money, and that's fine. You know, sometimes that's what happens when you're trying to manage funds for others. I'm still learning on that. I still have a long way to go in this, and this is really the heart. This video is the heart of my trading. This is how I look at the markets. This is all that I'm looking at. Whether you're right or wrong is one thing. What matters is implement this strategy and just manage your risk. And trust me, this is a long term endeavor, guys. But I kid you not, if you guys literally just implement the strategies that I've gone through in this video alone, you guys will be golden. I assure you. Whether you're trading forex, stocks, commodities, you'll be fine. All right, well, that's all I wanted to go over, the long and short setups based on the daily charts, weekly and monthly charts, and using the dollar index. I really hope this video clarifies a lot of things for you, because trading should be simple. And see, no alerts, no indicators, because you don't need them. Oh, see, here was a great opportunity to go long on pound Aussie, which I think we did, and we made some good money on that. And always, stops based on daily charts are the best, unless you're a boss and you want to trade on the weekly chart stops, which you can sometimes get. You can get some really good opportunities, like right here. You know, there's a pullback, you put your weekly chart here, and then it's an investment approach. You just make mad money. Yeah. Alright guys, once again, thank you so much for this opportunity, for everything really. I owe you guys. You guys have pushed me to be a better trader, and I hope I can serve you guys in fulfilling what you want from this course. And I'm eternally grateful to all of you for this opportunity. Once again, this is Azum. I hope you enjoy the course. We'll talk to you guys soon in the group chat, and enjoy the video. Alright guys, have a great day. Bye.